So some of the strategies you can use is a very common method that we use as sophisticated investors. We buy properties under market value and then you recycle your funds back out the property at the full price. And by doing so, you're able to build and grow your portfolio and scale it far quicker than anybody else out there. Let's use an example. Let's say you've got 5 properties all worth £100,000 each, 500,000, and you want to now scale that to say £5 million. How do you do it and what sort of time frames? Well, it does depend largely on you, how much capital you've got access to, but you need to understand some of the basic principles. So number one, buying property at a discount is crucial to help you get some of your cash back out so you can continue to grow. Because otherwise you're going to do what everyone else does and trap that money in a property. You're going to have to work really hard to save for another deposit. So that's a really good tip for you. Financing products, generally we use bridging finance. Now bridging finance works similar to a mortgage, but it's far quicker and they lend to you within anywhere from 7 days to 28 days. They will lend to you, they're far quicker than a mortgage product, and they're less strict. They will allow you to buy that property really fast. And then simply you're going to refinance that property in 6 months onto a normal buy-to-let mortgage product. And that is a very simple method, but also because you're buying it at a discount and you're using bridging, you're able to extract that deposit out really quick and grow that portfolio much quicker. So that's discount, that's finance. Also, you need to have a good management team to be able to scale up, right? Because if you've got 5 properties and you want to go to £5 million worth of properties, you need to have the right systems and processes in place. So we use letting agents. The letting agents we use are in the areas that we've got the properties. We've used them for many years and we've tried and tested some of them, and we're now working with the ones that have been very successful in keeping our costs to a minimum. You know, because the maintenance, when there's maintenance issue comes up, you need to make sure these agents are proactive. They're listening to the tenants, they're actually actioning the works, but also at the same time, they're working on behalf of the landlord and making sure you keep your costs down where possible. And it is really critical to have the right management agent in place. So another tip I would also give you for scaling your portfolio is have a good mortgage broker. You need a mortgage broker that has access to all the products, an all market broker. So they need to have access to lots of different products because some of the properties you're going to buy might be of a certain type. So for example, we have some properties in our portfolio we let on social housing contracts, and these are commercial agreements. So you can't just use a normal buy-to-let mortgage product. You've got to use a commercial mortgage lender, and it's important you've got a right broker who can get you the right product, because otherwise you're going to waste valuation fees. You can end up getting all the way down the line, wasting lots of time on solicitors and also broker fees, valuation fees, to be found that you're not actually going to get lending on that property. So you need to make sure you've got the right broker in place. Some of the properties you want to buy as well to scale your portfolio, you want to diversify a bit. So once you've got comfortable with some buy-to-let properties, they're rock solid, they're very passive, very predictable, but the cash flow that they throw off is quite low in comparison to other strategies. So you might have come across things like HMOs, houses of multiple occupation. So you rent the rooms out and you make a lot more cash flow than a buy-to-let property. The trade-off is they're a lot more time consuming, there's a lot of hassle, there's a lot of maintenance, repairs, and tenants can be a lot more transient. But in return, you're going to get higher cash flow. Some of the other types of properties we favour in our portfolio as well is mixed-use buildings. So you buy shops with flats above. Now, specifically, the good reason for doing this is diversification, but you're not going all into a separate type of strategy, like all commercial, because that could be quite risky. But you're getting a bit of exposure to commercial as well as residential, because you've got the residential aspect above with the flats. Now, by doing so, there's various things you can do. So for example, you could split the title. So generally a property with a shop and flats above could be under one title, and what you can do is split the title, so you've got each flat on its own title, and then put the shop into your pension and retain the flats in, say, an SPV in one of your company's structures. That's a very tax efficient way of breaking up a mixed-use building. So that's some of the things you can do by diversifying with mixed use. The other things about mixed-use buildings I really like is the cash flow they produce. Because you've got exposure to commercial, with commercial leases, they're actually very good, a lot more solid than a buy-to-let AST agreement, for example, because they're generally longer. So some of these leases could be 3 to 10 years on a commercial lease on a shop. They're also, the tenant's responsibility is generally to repair the building and repair the internals as well. So this is known as a fully repairing and insuring lease. So these are some of the things that are great about commercial, and also the rent is a bit more guaranteed in some sense because it's over a longer period, and the commercial lease is a lot stricter than an AST agreement which you would have on the flats above. So it gives you that commercial exposure without going all into commercial, and you get higher cash flow as well. The flats above, if you get some of the buildings that we go for, there's scope to potentially convert them into house and multiple occupation and rent the rooms out and make additional cash flow there as well. So that's a way to scale it, by getting some buy-to-lets under your belt to start with, and then going for things like HMOs, mixed-use buildings. There's other strategies as well. You could go for holiday lets. We like a lot of holiday lets because they provide very good cash flow. So have a think about it, but have a think about the management, the finance, and we've also discussed buying at a discount. There's some really important tips for you when it comes to scaling your property portfolio from 500,000 to 5 million.